Welcome everyone to Vested Interest. This is Shane, and this is our weekly portfolio update. We did add $2,882 into the portfolio this week. The market has been pulled back significantly over the last couple weeks, and I've taken the opportunity to add some additional capital. This is not a typical week, but we will cover all of the investments into the portfolio with this new capital added, any dividends paid out, any options we were in. But before we get too far in the video, I would like to take a moment to thank everyone who's taken the time to watch, comment, and like the channels, and a special thank you to the subscribers of the channel. Really do appreciate it. The channel continues to grow because of people like you. And for those of you who may be stopping by for the first time, it's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend, and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the portfolio on a weekly basis. That's what this video is, our weekly portfolio update. I also do larger purchases whenever I get a bonus. Usually that's around March or April. If I was to run into any extra funds from a side job, or someone was to pass away and leave me a bunch of money, I don't think that's happening anytime soon. Most of my family is relatively poor, so I'll be lucky not to get any bills whenever someone passes in my family. Hopefully they've got everything paid off and I don't have to take care of some things whenever they're gone. But if I was to get a large sum like that, it would go right into the portfolio, either mine or my daughter's custodial accounts. It is free to see what I'm doing on the channel, but if you would like to help out, go ahead and hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you are subscribed to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever I put out any new content. Along with this weekly portfolio update series, I do a stock pick of the day series Monday through Thursday whenever the market's open. Typically, I do take a day off from time to time if I have something going on, especially around the holidays, which I did recently this week around Christmas. And if you can, there is the thanks button down below. If you want to buy me a cup of coffee, go ahead and hit that. There's several tiers in there you can donate to the channel. I don't really drink a lot of coffee, but I do drink tea. So I guess if you wanted to buy me a cup of tea, that's a way to do it. Any of the funds that I received there or from YouTube in general, I have not received any money from YouTube yet. Hopefully sometime in the future I will. But that will go right back into the portfolio. I'm actually going to split it up between my portfolio and my daughter's two custodial accounts as well. All right, with that said, since we've wasted about 2.5 minutes, let's get into the update here. And no options. To be honest with you, I did not even throw anything out. With this being a shorter week and with it being Christmas, I was very busy at the beginning of the week. Usually I throw out options either late Sunday or first part of Monday morning as I do my investing there in the first part of the week. But we had some family coming in this week for the holidays, so I did not even put out any options plays this week. We'll try to get back into it next week and see what we can hit. It has not been a good month. As a matter of fact, I don't think I have anything to show as far as options for December yet. Now, we did get some dividends, and the first one rolled in on December 26th here. We received $48.24, and this is from the Vanguard Index Fund. Vanguard's total stock market here, ticker VTI. This one I invest into every week, at least one share a week. Pretty much have been doing one share a week for the entire year of 2024, and we're going to continue to do that into 2025 and beyond. With that $48.24, we did receive 0.16371. We do have the drip set, so that just means anytime a company, in this case ETF, pays out dividends, VTI paid out $48.24, that $48.24 goes right back in and buys more shares of that same company. That's what DRIP stands for, Dividend Reinvestment Plan, right? And those new shares added an additional 59 cents in passive income over the next calendar year. And that is what is referred to as the dividend snowball or compounded interest. If you hear either one of those terms, that's what they're talking about, right? Again, I have shares of VTI. Those shares pay out dividends. $48.24, that dividend payment goes back in and automatically buys more shares. Those new shares, or fractions of a share in this case, add additional passive income, and that snowball continues to grow as time passes. Even if I don't add any additional capital to VTI, that will continue to grow. We weren't done. On the 27th, we received dividends from Kraft Heinz Company, ticker KHC. KHC is out of the consumer staples sector, paid us $86.16. And again, we have the drip set on all positions. In my portfolio, it's either all or nothing. So all positions are set to drip. I would like in the future if they could set it up for individual positions could be turned on or off. There are several that are up right now. I would probably turn off and try to reinvest those back into some other positions. But again, my portfolio, my brokerage account only allows me to do, and I use Ally Bank for my brokerage account. It is a taxable account. They only allow me to do all or nothing. So all the positions the drip are set. So in this case, the $86.16 from Kraft Heinz went right back in and picked up more shares at Kraft Heinz, 2.80753 more shares to be specific, and that added an additional $4.49 in passive income over the next calendar year. Now to the first new purchases. We did add $1,739 into the portfolio on December 23rd, and this is really typically a weekly contribution. Obviously, this week we invested more than a typical week, almost doubled up from a typical week. And again, it's because the markets are down. I have a little bit of cash sitting on the side. Interest rates on savings accounts are going down as they reduce the yield as the Fed reduces the Fed rate. So my overall savings account has dropped below 4%, still in the high threes, but I'm taking advantage of the pullback and adding a little bit more capital. Probably will do that over maybe the next week or two, as long as markets stay pulled back or a lot of positions in my portfolio stay pulled back. Then I will take advantage of the pullback and add a little more. And again, $1,739 in capital added, and the shares we picked up with those funds, one share of Valet, ticker VALE. This is out of the materials sector. Picked up that one share at $8.90. This one I'm just nibbling on. It's well below my cost basis. I think I'm down about 20% on this position. I think materials overall, the sector is down. So I'm going to take advantage of it while it's down. Not a significant amount per week, but I will nibble. So one share of Valet at $8.90. Healthcare sector is another one that's down right now, so I took advantage of that in my CVS position, added 3 more shares. Ticker CVS is out of the healthcare sector. Picked up those shares at $43.80. Occidental, ticker OXY, out of the energy sector. This is our newest position. We recently added this one on the big drop there. So I want to try to build this one out while it's under 50. Probably continue to build it out until I get to at least 100 shares. This is one in Warren Buffett's portfolio, and he recently added as well. He started this position, and it's a large position now in his portfolio. He started in the top 10, I believe. He started this position in the 60s, high 50s, low 60s there. I didn't really see the value there, but down under 50, I definitely see the value. So mid 50s or under is where I'm at with this one. Added 10 more shares at $47.64. And again, this one will probably be a focus at least for the next month while we build out this position. It is the newest one in the portfolio. Lamb Research Corporation, ticker LRCX. We continue to nibble on this one as well. 4 more shares added at $72.89. Now, Union Pacific industrial sector is another one that's really pulled back. So the 3 sectors that have really pulled back, industrials, healthcare, and materials right now. Seems like overall the sector we're seeing a pullback. Union Pacific being in the industrial sector, ticker UNP, added 2 more shares there at $225.99. And Owens Corning, another one in the industrial sector, ticker OC, added 2 more shares at $170.10. I wouldn't mind adding some more here to Owens Corning. Union Pacific seems to be bouncing back a little bit. I think it was up over 230 by the end of the week, but wouldn't mind adding a little bit here. Probably more of a focus on Owens Corning than Union Pacific. And this one may be one, along with Occidental, that we look to focus on as we go into 2025 for January. Passive income added, the $1,700.39. New shares it picked up added an additional $37.69 in passive income from these shares here. We weren't done. We went right back in on December 26th and added an additional $1,182.26 in new capital. And with those funds, we picked up 6 shares of Haverty Furniture Companies, ticker HVT, out of the consumer discretionary sector. Picked up those 6 shares at $21.89. Another one that's down below my cost basis. Wouldn't mind nibbling on a little bit. Procter & Gamble, haven't added anything here significantly for a while, so we took advantage of a little bit of a dip here. Ticker PG, another consumer staple sector company, added 2 shares at $169.34. Probably won't be adding a lot there. Looking for more of a pullback, but took advantage of adding a little bit more there anyway this week. American Waterworks, another one that dropped significantly out of the utility sector. Ticker AWK, added 2 more shares at $125.52. Probably another one like Procter & Gamble. I'm not looking to add a lot, but if it was to pull, and it's not below my cost basis, neither one of these are below my cost basis. They've just pulled back a little bit. This one significantly and is close to my cost basis. Not looking to add a lot there either, but if it was to drop below my cost basis, I might nibble. while it's under. But really my focus right now, like I said, is Occidental, ticker OXY, and probably Owens Corning as we go into 2025. At least for January while they're pulled back. Vanguard's total stock market ETF, ticker VTI, not only did they pay us dividends, this is part of our weekly buys. So we did our weekly buy here, one share of VTI at $296.39. And Schwab Strategic Dividend Growth ETF here, ticker SCHD, the other weekly buy. Usually we pick up 3 shares. We doubled that up this week, picked up 6 shares at $27.47. This one is just below my cost basis right now, so that's why I doubled up on that one. Passive income added from the $1,182.26 we invested, and the new shares it picked up $31.54 more in passive income. Total invested $2,882.65. This is not typical. Like I said, with the pullback, I took advantage of the pullback there and added a little bit, pretty much a double up of what I typically add to the portfolio. Around $1,450 is a typical weekly addition, but we doubled that up, $2,882.65, and added an additional $74.31 in passive income into the portfolio. All right, let's run through the sector weight updates real quick. Communications sits at 10.23% of the portfolio. Consumer discretionary at 4.85%. With the HVT additions, we're getting pretty close. I wouldn't mind BABA. If BABA pulled back into the 70s, wouldn't mind adding a little bit there. Got my eye on a couple positions actually in consumer discretionary. Pool is one of them. If that was to continue to pull back, it might be one I'd add to the portfolio, and a couple others as well. But probably going to nibble on this one while it's pulled back, at least HVT, maybe a little bit here and there. And then, like I said, if BABA was to pull back, I'd like to add some more there. But consumer staples sitting at 9.56% of the portfolio. You saw the Procter & Gamble additions there. Energy makes up 6.37. We're going to continue to add to this one with the Oxy addition to the portfolio. So we're going to really build that one out over January. So long as it stays under the mid 50s, 55 or under, I'll probably build that to, like I said, at least 100 shares, if not a little bit more. Financials makes up 2.76. Healthcare, this is one of the sectors I think is really pulled back right now. Johnson & Johnson is below my cost basis. Pfizer is well below my cost basis. CVS is well below my cost basis. So I'll probably nibble on those, but with it being one of the larger positions, I don't want to add a lot here because whenever these companies do rebound, it'll really drive this one up. But I am going to nibble. I'm going to focus on some other areas. I think there's more value. But like you saw the 3 shares of CVS there. I haven't added to Pfizer in a while. Johnson & Johnson just dropped below my cost basis. I think I'll be able to add to this one for a while because I think with a lot of the unknowns with the new political changes that are coming up here in January, the new president taking over, JFK taking over a position, it seems like there might be some hits to this sector that might continue for a while. So I think I'm going to be able to add to this one while it's pulled back, not only now, but at least through Q1. So I'm not looking to add a lot right now, but I am looking to nibble on this one as well. Industrials, another sector that I see a lot of value in right now. Like I said, Union Pacific's down there. Owens Corning, I'm taking advantage of that drop there. Several others out there. HEI is one. HEI-A is one that I'd like to, if it was to pull back into the 160s or below, get back to its 52-week low in the 140s. It's another position I might add to the portfolio, but we'll see. It's not quite there yet. I think it was down in the 187 range. So not quite where I want it, but it is another one on my watch list. And industrials is another sector that I see some value in right now. Technology sitting at 14.37%. With the LRCX position, we'll nibble on that one a little bit. Google has jumped up, so we're not looking to add to that one right now. If it was to pull back again, we would. But LRCX is really the only one in that particular sector that we're looking to add right now. Materials, this is that other sector I see a lot of value in. Valet, Nutrien, anything in the material sector seems to be pulled back significantly right now. So I'm going to nibble on that one as well. Those positions specifically, Valet, maybe a little bit more into NTR. Utilities makes up 8.18%. AWK we just recently added to this past week. Not looking to add a lot there. Next Era Energy is another one we have in that sector. That one's up significantly. So it needs to pull back for me to be interested in adding to there. AWK, if it was to drop below my cost basis, it's just slightly over, like 4 or 5% over right now. So that's why I was willing to add to it. But if it was to drop below my cost basis, we might add a little bit there, but not looking to add a lot, while the healthcare sector, industrial sector, and material sector are pulled back. So not looking to add a lot there, but may nibble on AWK. REITs and real estate O, ticker O, the monthly paying REIT is down below my cost basis right now. Might add a little bit there. I think I added a little bit the week before last. So might look to add a little bit there. And ETFs, we are adding to weekly our SCHD and VTI positions, and we will continue to do that. Eventually, this will overtake the portfolio and be the largest piece of the pie here overall. Over here to the right, you can see those percentages that match up to the pie, and then the dollar amounts allocated to each sector and the total there at the bottom. And here it is, and I do show this weekly. I think it's important for those of you out there who watch the channel, some new investors out there I know, some investors who have been doing this for a little bit. Maybe you're not seeing the results in your portfolio. Maybe you recently bought a position and it dropped by 15, 20%, and you're starting to freak out a little bit. I want you to see the ups and downs in the portfolio, right? You can see some of my positions are really pulled back. CVS being down 31.94%, HVT down 16%. What's this one here? Nutrient down 15%, right? Kraft Heinz down 12%. Valet down 26%. Verizon's even dropped below my cost basis again, down 2.92%. So as you can see, the market goes up and down. Individual positions go up and down. All of these positions, even the ETFs, have a 52-week low and a 52-week high, and any time during the year, they can retest that 52-week low, set a new 52-week low, retest that 52-week high, or set a new 52-week high for any number of reasons, right? Overall market pullbacks, negative news, Fed's either raising interest rates or dropping interest rates, a lot of different reasons, some situations outside Americans' control, a country going to war overseas, right, that might impact oil or something, or shipping or something like that, a pandemic like we had a few years back, a lot of reasons for stocks to drop, guidance being lowered, or earnings, they're not hitting their earnings or expected earnings or earnings per share projections. A lot of reasons companies can drop, and they will over time. They're going to go up and down. So long as they are good companies, you've worked out a good price that you're willing to pay. If you see red in your portfolio, like I do, among several positions, that should be an opportunity to buy, unless they're bad companies or something with the company has changed. The fundamentals of the company have changed, right? I don't think the fundamentals of LRCX have changed. So if I was willing to buy it at 78.70, why wouldn't I be willing to buy it at 73.40, right? Same thing with Occidental. It's above my cost basis now at 47.62, at 48.55. No, fundamentals of the company haven't changed. It's just over my cost basis. I'm willing to buy there. Ticker O, same thing. Have the fundamentals of the company changed? Well, if not, right, I was willing to buy it at 58.04. I should be willing to buy it at 52.69. The stock market seems to be the only market where people see prices go down and they want to sell, right? When you walk into a store, think of it this way. When you walk into a store and you're looking to buy something, if you walk in thinking it was going to be $60 and it's on sale for 40 or 30 or 20, do you say, oh man, it's cheaper now, it must be a terrible product, I'm not buying it? No, you buy it, and you might buy 2 of them, or you might buy 3 of them, or you might buy something else along with it. The stock market seems to be the only market that when there are pullbacks, people freak out. And I get it, your money's dropping, or it seems like your money's dropping, and people want to sell. They don't want to see the loss. Well, here's the thing. If you buy when it's pulled, or if you sell when it's pulled back, you lock in that loss, right? Just because these positions are in the red and it looks like a loss, I haven't lost a thing unless I sell out of HVT and lock in this loss. I let this sit, and eventually it'll rebound, right? Eventually it'll be up 16%. That's just the way the market works. Time is your best friend in the market. Let time work for you. During the pullbacks, buy. During the run-ups, hold. That's the way I've been doing it. Owens Corning, for example, right? If you've been watching the channel for any length of time, you know that I was up 90, almost 100% on this position. Pulls back to where I'm up 55, well, I'm adding to it. That's how it should work. Hold whenever the run-up happens. Buy when the pullbacks happen. That's how you should be working your portfolio. And obviously, I've got a lot of opportunities to buy, a lot of positions in the red, but they are not the only ones that I'm adding to. I'm also adding to positions that have pulled back significantly that I'm up on, right? Like Owens Corning, Procter & Gamble, Union Pacific, right? Union Pacific, I'm still up 13.89%. But if you've been watching, you'll notice I've added 2 shares over the last several weeks to add an additional 4 to 6 shares of Union Pacific, even though I'm up. Well, it's pulled back with the rest of the market. So I want to add to those good companies that are up just as much as I want to add to those positions that are in the negative, right? Pullbacks aren't just on companies that are down either. It should be for companies overall in your portfolio, like Union Pacific, like Owens Corning, right? So enough of the rant. That's why I show the portfolio update every week. I want you to see a real portfolio built out over time and to understand the ups and downs of the market, and the ups and downs of individual positions are normal. It happens, and you can use them to your advantage, right? Don't freak out, sell out of a position unless you don't understand what you bought, or unless something has changed. The fundamentals of the company have changed. Is their revenue declining all of a sudden? Are their margins collapsing? Are their sales declining? Has something changed? Is there another competitor that's come in and taken market share from them? Is there something that's changed with the company from the moment that you bought it to today? That's the only reason you should be selling out of a position, or if there's a better opportunity, right? If something, let's say Microsoft all of a sudden dropped to $300 per share, I would probably sell out of Cisco. I would probably sell out of HPQ. I may sell out of other positions to buy something like that if it's a significantly better opportunity than the positions that I have already, right? So there's some reasons to sell. Fundamentals of the company have changed. Definitely a better position opportunity in another position. Unfortunately, sometimes you might need cash, right? You lost your job or something like that. That might be a reason to sell as well. But just because a stock went down, that is not a reason to sell. Okay, sorry for the ramble and the rant. I'll get off my soapbox, but I think it's important to say that every week. Again, some of you may be new here. Some of you may have just started your portfolio. Don't sell just because the market drops. That's normal. All right, so here's the ticker, all the different positions in the portfolio here, how many shares I own of each, current price as of the close of business on Friday, and all of these numbers will be as of the close of business on Friday, actually as of the market open on Saturday, which should be the same as the close of business on Friday. Market value of each position, my average cost per share, purchase price, so what I have in each position, that's cash out of pocket plus dividends reinvested, right? That's what the purchase price is. So it's not just cash out of pocket because I reinvest the dividends. So this includes that reinvestment. Total return here, whether I'm up or down, I'm going to show it every week. Percent return here, again, red means I'm down, obviously green means I'm up. Which sector each position falls in, whether they're a quarterly, monthly, semi-annual payer, current dividend yield as of the close of business on Friday, my yield on cost, portfolio weighting. So what you saw on the previous slide was each sector's weighting. This is each individual position's weighting. And I do have a rule in the portfolio. I don't want, outside of ETFs, I don't want any sector to be more than 20 to 25% of the portfolio, and I don't want any one position to be more than 10 to 15% of the portfolio. Estimated annual income here, payout months here, dividend growth year over year, and this will fluctuate and change as they increase their dividends. As you can see here, Owens Corning recently raised their dividend from 60 cents up to 69 cents, so I'm highlighting those. As we roll into 2025, some of these companies have already started raising their dividends for their payouts next year. Owens Corning pays out in January, so they just announced a 9 cent dividend increase, which amounted to a 15.28% raise there. So that went from 60 cents to 69 cents, if I remember correctly. So I like to see those dividend raises over time. You'll see that here. And as they adjust those dividend raises, I'll adjust this dividend growth and where it sits at 15% of a 52-week low. So let's talk about this for a minute. I'm going to use Owens Corning as an example. Owens Corning, ticker OC here, right? Follow that along, if you need to, right there. So 15% of a 52-week low is $159.50. That means I don't want my cost basis, my average cost per share for Owens and Corning to be over $159.50. And this will fluctuate as well as prices of stocks change, right? So I adjust this about once a month as well. Right now it's sitting at $159.50. That's 15% of the 52-week low. My cost basis is $109.05. So I'm adding to this one. Yes, I'm bringing up my cost basis, but it is still significantly under 15% of the 52-week low here. So I'm willing to add to it up to this $159.50. Now, I don't think I'm going to get there because, like I said, I'm looking to nibble. I'll probably add another 2-3 shares next week, get this to 60, so long as it's around 160 or under, or 170 or under, right? I added at 170, I think closed the week at 169.85. So if it stays at that 170 or under, I'm going to continue to build this position out, and I'll continue to build it out so long as it stays under 159.50. Right now at 109.05, I'll probably get to, if adding 2 shares next week, that'll probably get me to like 110, 111 per share, which still will be well under 15% of a 52-week low. So that's how I use that. It's just the high water mark that I want my average cost per share. Let me know in the comment section if that doesn't make any sense, but that's how I use this column. All right, so total shares, 6,422.336 shares. Market value of the portfolio, $311,601.18. My out-of-pocket and reinvested dividend amount is $298,828.81. So keep in mind, that is not just money I put into the portfolio, it's also reinvested dividends. Total return, I am still up, $12,772.37. Does this really matter? I mean, does it? I'm asking you, seriously, does this really matter? Nice to see that I'm up, but unless I sell out of all the positions in the portfolio, this doesn't mean anything, right? Doesn't mean anything. Percent return, yep, up 4.27%. I don't focus on this. If you've been watching the channel, you've seen me up, 18, 20%. You see me down 14, 15%. And I say the same thing. I don't focus on this. Yeah, I'm up 4.27%, not my focus. It's nice to see, but again, unless I sell out of all these positions, I don't lock in that gain. Current yield, 3.982%. My yield on cost, 4.152%. And this, the reason it's circled over here in red, this is what I'm focused on. The dividends paid out from all the positions in the portfolio. It continues to grow week over week as I add new capital, month over month, as these positions pay out dividends, quarter over quarter, year over year, as they raise dividends as well, and currently sits at $12,407.23 in annual dividend income. Nice to see that continual growth. Every now and again, we do see a drop. MPW, for example, months back, we owned that when they dropped their dividends significantly. We saw a drop there. We've sold out of positions and seen a drop on occasion. But for the most part, this continues to grow as the market goes up, as the market goes down, as the market floats sideways, and this continues to grow. And again, $12,407.23, and we'll see a new high next week. This is the high so far. We'll see a new high next week. And dividend growth year over year currently sits at 6.65%. All right, well, that is it for this one. Let me know what you're buying. Really would love to know what you're adding to your portfolio with this big pullback. I know over the last couple of weeks we've seen a big pullback in most stocks. I know overall tech seems to still be growing faster than everything else, but even that has seen a pullback recently. So would love to hear from you. Let me know what you're buying. What are you adding to your portfolio? Are you selling anything and maybe locking in some gains? Reallocating funds as we head into 2025. Love to hear what is going on in your portfolio. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community. Ring that notification bell so you're notified whenever we put out any new content. And I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So go ahead and drop those down in the comment section down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend and a very happy New Year's. New Year's is coming up here shortly. Be safe out there, but have fun as we head into 2025. Thanks for stopping by, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.